The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to Squawk Box. I'm Steve Sedgwick with Karen Cho, and these are your headlines. So, UniCredit results are just about to hit the wires, with investors eyeing updates on the Italian lender's M&A outlook. We're going to speak with UniCredit's CEO Andrea Orcel. That is exclusively coming up at 6:30 GMT. President Trump confirms orders for a 25% tariff on steel and aluminium imports, a warning of further trade levies in the coming weeks.
We'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips.
Gold hits a fresh all-time high, its fifth record settle of the year, as tariff tensions push investors towards safety. Quote, no thank you. Sam Altman brushes off an unsolicited $100 billion bid from a group led by Elon Musk to buy OpenAI as the billionaires' bitter rivalry takes a new turn.
French President Emmanuel Macron pledges to roll back the European red tape here at the AI Action Summit in Paris as the bloc battles to keep up with the US and China in AI.
This summit is not just the announcement of a lot of investment in France. It's a wake-up call for a European strategy.
Right, we've got so much amazing news for you. It will take us at least 3 hours to get through it. Good morning, Karen. Lovely to see you. I'm going to go straight into UniCredit as well, because this is a bank which is, well, it is the enfant terrible of European banking at the moment, shaking up German banking, shaking up Italian banking as well. And my goodness me, the shares over the last year have had a solid rise. Right, has that been justified in terms of the fourth quarter numbers? First blush, absolutely. 1.97 billion euros in fourth quarter net profit. That has wiped the floor with the company compiled consensus of 1.44. In terms of net interest in the fourth quarter, 3.65 compared with 3.45 billion euros. Revenue, again, just a little bit above expectations here, actually. 6 billion euros versus 5.89. The CET1 ratio, the regulatory capital level at the end of December, 15.9%. I haven't seen the ROTE yet. That's always going to be exciting as well. Sees 2025 shareholder distribution guidance above full year 2024 and is setting revenue guidance to 23 billion euros. Guidance for net profit and ROTE in line with full year 2024. And we know that the ROTE, which is a strange acronym, but it's return on tangible equity, has been the best in class across Europe. A couple of the Spanish banks, similar kind of levels, but no one really surpassing it too much. Those are the first announcements.
A lot of pressure, I think, on the bank. There's been a compare and contrast as to what's happening with Commerzbank. Obviously, given it's been what we're seeing now in the numbers, it is enough to justify this is a much stronger bank. And that is the message that Orcel's going to have to get across, that it is a very strong institution. But to your point, we're waiting for the M&A news. I mean, that is the key commentary here. And in terms of net interest income, I think at all banks at this point across Europe, we're looking at what that number looks like, because interest rates are coming down. On that NII for 2025, slightly down, fees up mid-single digits. So I think it's that split between fee income and the interest income for these banks at this point.
Okay, let's park that there, because they look very solid numbers. I appreciate that slight fly in the ointment on the NII. We all expected that, obviously, given the fact that interest rates are going down at the ECB as well. Sylvia is actually, she's got a plum assignment today. She's speaking to the UniCredit CEO, Andrea Orcel, in Milan later this hour, and we'll give you that exclusive conversation. When should we do it? Should we do it in about half an hour? Let's do that. Elsewhere, Mediobanca has raised its outlook for the next financial year after beating consensus on the top and bottom line in the first half. The Italian lender, which is looking to defend itself against a bid from the smaller rival Monte dei Paschi di Siena, now sees revenue of 4 billion euros for the coming year, up from 3.8 billion previously expected. Right, it's been 4 minutes and we haven't mentioned Trump. Let's do that. Mr. Trump has signed an executive order confirming plans for a 25% tariff on steel and aluminium imports to the United States. The levies are scheduled to come into effect on the 4th of March, which would coincide with tariffs on Canada and Mexico. Having said there would be no exemptions to the tariffs, Trump hinted that there could be an exemption for Australia, noting the US trades surplus with that country. Mr. Trump also said further sectors would be in the crosshairs in coming weeks.
That's going to mean a lot of businesses are going to be opening in the United States. Now, we're going to be meeting over the next 4-week period, maybe on a weekly basis, and maybe we'll do a couple of them at different times and maybe together. But we'll be talking about other subjects like cars. We'll be talking about drugs and pharmaceuticals. We'll be discussing chips, and we're going to be doing some other things in addition to that, all which will bring in a lot of jobs into our country.
I'll just go off schedule very briefly. As an employee of an American company, firstly GE, and then NBC Universal and Comcast, over the last quarter of a century, I have lost touch with how many modules I've done on foreign practices, bribery practices, corruption practices. And actually, despite the fact that nobody loves doing these assigned modules, the fact is I found it very useful and just to know where the line is on anything that may well be grey in terms of buying a cup of tea, for instance, for a public official. We can't even do that, for instance. So if a policeman was outside directing traffic, we're not allowed to buy him a cup of tea without it going through the company. I've always felt it was the right kind of thing to do, to have a very clear set of rules as well. But now the water is going to be muddied for all Americans and all American company employees. It's
a Western way of operating. I can't imagine Europe is much different either in terms of the lines here about how you engage with public officials. So Trump's argument was that slowing down and stopping American companies from winning business because instantly there'd be some sort of investigation triggered. Is that the case, or is that just part of doing business with Western companies if you are based in a jurisdiction where there could be question marks over the operating practices?
Let's leave that question hanging there, because President Trump has ordered the Department of Justice to pause enforcement of the Foreign Corrupt Practices Act, which bars US companies from bribing foreign government officials to win business. The order called for revised enforcement guidelines, saying that current DOJ action hurts American firms competing abroad. Let's just leave that story there, but I think it speaks volumes for itself. And again, Karen and I have actually, we don't like doing modules. They're a pain in the neck, but actually, I thought it was the right way forward.
The red lines are quite useful sometimes, aren't they? A consortium led by Elon Musk has offered nearly $100 billion to acquire the non-profit arm of OpenAI, further inflaming tensions with Sam Altman. After founding OpenAI together back in 2015, the pair have been at odds over its future and Altman's design to transition into a for-profit company. In a statement provided by his lawyer to the Wall Street Journal, Musk said he wants to see OpenAI return to its original open-source, safety-focused force for good. Altman took to Musk's X platform to respond, writing, "No thank you, but we will buy Twitter for $9.74 billion if you want." Very sharp response,
he called it Twitter.
Exactly, not
I
X.
love it.
Let's get out to Arjun for more live from Paris, because that's where the action is meant to be today as we're waiting for an address from Sam Altman. But very swift response here. But Elon Musk, you've got a man with a megaphone, and a very important megaphone given the links to the White House these days. Mega bucks given his net worth and ability to tap into any funding source really if he's got a new venture. But of course motivation, because he has his own AI ambitions. So what we're talking about here, is it a challenge over the not-for-profit structure, or is it about Elon Musk wanting to be superior in AI in future, Arjun?
Well, look, Elon Musk has been not consistent in everything, but he has been consistent in his criticism of Sam Altman and the direction of OpenAI, in which he feels that OpenAI is going in a direction that is at contrast with what it was set up for, and that was to be a non-profit source of AI innovation that in theory would benefit the world. Now, I think Elon Musk's statement is interesting, in which he says it's time to return to the open source safety-focused force. And open source, of course, has become a huge area of focus since DeepSeek's model was released that really sent ripples across the AI industry, because that was open source. And there's this huge debate now on whether open source really is going to completely disrupt what the likes of OpenAI is doing with its closed models and its focus on sort of enterprise and big collaborations with Microsoft as well. And so this is, I think, at the heart of it. I think the conversations we're going to have today are going to very much excite the open source crowd here at the AI Action Summit. But I think, there is also, as you mentioned, Karen, that second part is Elon Musk, of course, wants to invest in AI. He continues to talk about AI across all of his businesses, from X through to Tesla as well. And no doubt, having control or having ownership in OpenAI would certainly benefit his business ventures.
I know I'm sometimes a bit dumb about AI, and I take that on board. I'm learning. But I thought last year they had a funding round at $157 billion. I thought there was a story on CNBC a week and a half ago talking about it potentially raising money at a $340 billion valuation. And Trump's bidding $97 billion. Have I missed something here?
Yeah, it's a great question, Steve. Clearly, Elon Musk at this point is not valuing it at the current valuations. And look, we've spoken over particularly since the DeepSeek model release, we've spoken so much about whether this changes the game in terms of valuations for these companies that have raised, quite frankly, astronomical sums. Now, broadly, the conversations I've had since DeepSeek has come out with those in the industry, to caveat that with, is, look, we think that the infrastructure play is not going away. We still will need more compute. We still will need to raise more money to continue to invest in what is very expensive infrastructure around the GPUs, around the data centers across. And you saw here in France, Macron announcing a more than 100 billion euro investment in France's AI infrastructure as well. So that infrastructure story doesn't seem to have gone away at this point. And so, the valuations are going to continue to be called into question. Clearly for Elon Musk, he doesn't feel OpenAI should be valued where it is at the moment.
Jim, we've got to talk about this summit that you're attending because it is a big one. We've attended a lot of tech events in Paris before, but this seems to be the huge big daddy of the lot of them. Now, French President Emmanuel Macron has pledged to cut back European red tape in a bid to bolster AI investment development. This on the back of his 109 billion euro AI investment drive, partly led by the state and partly by the private sector. Addressing delegates at the summit last night, Macron said the event should spur France and Europe to invest into future technologies.
This summit is not just the announcement of a lot of investment in France. It's a wake-up call for a European strategy. Tomorrow, President von der Leyen will announce the European AI strategy, and it will be a very important occasion. So it's very important in this world where I have a good friend in the other part of the ocean saying, drill, baby, drill. Here, there is no need to drill. It's just plug, baby, plug. Electricity is available. You can plug, it's ready. And I can tell you, we will go fast and very fast.
Well, let's get out to Arjun again for more on this. Arjun, remember back in 2023, I was asking Macron about the gap between French companies, European companies, and American technology giants in AI. It feels like he's tapped into capital markets and he's got some money now to throw at AI, given what we were just talking about with Stargate the other week, 500 billion over 4 years.
Yeah, and certainly, look, to put it in context, that is a very large investment that Macron has announced here at the AI Summit. And the conversation really yesterday was all about China and the US. And my question to many people was, where does Europe fit in? And there was still a lot of criticism about the fact that Europe's rushed ahead with regulation and this idea that Europe regulates and doesn't innovate. And so Macron here really trying to change the perception. But I think it's still very hard to cut through the noise, particularly with companies like OpenAI at the fore here. And the interesting thing, and what OpenAI has tried to position itself here, is sort of the leader of AI across like-minded countries, led by the US and hoping to bring countries in Europe and elsewhere on board as well. And that was sort of the conversation I had with Chris Lahan, who is the Chief Global Affairs Officer at OpenAI. Now, just bear in mind, this happened before the Musk news overnight. But we were talking a little bit about Europe's position here and really how this US and China AI battle is going to play out. Let's just listen in.
But there is this very real competition between US-led, small d democratic AI and CCP, China-led, autocratic, authoritarian AI. there's 2 countries in the world that can build this at scale. Imagine if there were only 2 countries in the world that could build electricity at scale. And that's sort of how you have to think about it. And so for us, what DeepSeek really reinforces and reaffirms is that there is this very real competition with very real stakes at play.
And there was a while when there were many who thought, China were quite far behind when it came to the development, particularly of these foundational models. They pointed to things like restriction to access to hardware, in particular the GPUs, and multiple other factors. But actually what DeepSeek has shown, and not just DeepSeek, we've seen it from Alibaba and others as well, that there's some serious innovation going on. And actually, perhaps at this point in time, in terms of models, they're on par. What does the next 2 or 3 years look like in your view?
It's a great question. I would say, in terms of where the competition is right now, the US AI still has a lead. I mean, the model that DeepSeek put out was very similar to a model that OpenAI put out back in September. And since then, we've even released some updated versions. But I think what your question is really getting at is a concept that we think about, and its infrastructure is destiny. Ultimately, the competition between democratic AI and autocratic AI is going to be determined by compute. And let me unpack that for a second. Compute is just the raw computing power that you need to build these AI frontier models to then do the applications for it. And there are a couple elements that go into compute. It is data, it is chips, it is energy, and it is talent. And if you look at China, they have some inherent strengths. As an authoritarian country, they have tremendous access, infinite access to data. Energy, they just brought on 10 nuclear power facilities last year, another 10 is scheduled to come on this year. Obviously a ton of talent in that country. You were there, you've reported, you've seen it. On the chips, maybe a little bit behind, but they're throwing enormous resources at it. I think US-led AI, Democratic-led AI does have one big advantage in all of this, and that is capitalism, democratic societies that empower its people to be developers, builders, innovators, entrepreneurs, the people who watch CNBC, and we do have to take full advantage of that.
Just want to summarize some of the conversations out of OpenAI. Reid Hoffman, the co-founder of LinkedIn, I spoke to as one of the other executives here on the ground, and I think that is DeepSeek was an impressive model when it showed great efficiencies. It laid down the gauntlet from China, and it's clearly shown that China's innovation is keeping up pace with the US. But it's also now raised a lot of questions geopolitically, and the view from OpenAI in particular, which has really positioned itself as almost sort of the savior of the AI world when it comes to the Western world. OpenAI is saying, look, it can lead this world in which it thinks there's going to be US-led models and Chinese-led models. And effectively, countries are going to have to pick a side here. And so that's really what Chris Lahan of OpenAI was laying out there, the case that actually there needs to be a US-led system when it comes to AI, and OpenAI feels that it can be at the center of that. Guys, back to you.
Arjun, thank you. That whole open source versus proprietary debate, we thought we'd just be having in tech circles, but here we are. It is a global issue now. Thank you very much for the coverage, Steve.
Thank you. Right, okay, coming up on the show, Sylvia's in Milan with a special guest. She's going to be speaking to the UniCredit's CEO Andrea Orcel. We'll go through the numbers after a fourth quarter beat. That exclusive interview, 6:30 London time. Plus, it's day 2, as you saw there, of AI Action Summit in Paris. We'll bring you live coverage from Arjun there as well. And we'll dig into the luxury powerhouse Kering as the company posts fourth quarter earnings. The New York Fed's latest consumer expectations survey showed inflation predictions largely unchanged in January, with medium expectations for 1 to 3 years ahead, horizons holding at 3%. Medium 5-year ahead expectations came in 30 basis points higher, also at 3%. Got to be honest, isn't it amazing how consumer inflation expectations are so specific 3 years out when the Fed doesn't know what's going on next month? Well, any of us do. Uncertainty around those expectations was unchanged at the 1-year threshold, declined on the 3-year outlook and increased for the 5-year ahead window. You got all that? I'm going to test you on it later. Karen.
That uncertainty is fascinating, isn't it? Because we've still got markets trading very close to record highs, about 1% off those levels for the Dow and the S&P 500 after we closed yesterday, about 2% off that level for the Nasdaq. And if you look at the stocks underlying the market, yesterday was energy stocks at the forefront, up more than 2%. And at the individual names, it was McDonald's that climbed for the likes of the Dow. It did miss on its fourth quarter numbers. However, the international comparables were strong enough to encourage investors that the golden arches are getting back on track, that management certainly has a strategy here. So that was one of the big moving stocks. Also Nvidia, so chip stocks. But again, I think the market's very cautious about what's coming next on tariffs. It's been around steel and aluminium, but next up could also be semiconductors, and what that means for some of the big names is going to be fascinating from here. So watch this space. In terms of treasuries, here's how we're looking with those interest rate expectations and investors pushing out further rate cuts to the next quarter. 4.27% is where we're tracking at the short end. The dollar trade, the dollar this morning on the back of those moves you're seeing on treasury markets. Euro dollar flat. We've got sterling coming off a little bit. We're 123.59, so just tilting red. Dollar weaker versus the Japanese yen, but stronger versus the Swissies. So a little bit of a mixed picture is what we're seeing. In terms of the Asian markets, we're ex-Japan. Japan is not trading today, but of the other major markets, it really is about the EV action in the Chinese markets. So BYD is going mass market with some of its smart driving applications, and not just the high-end models are getting some of that self-driving technology, but more broadly based in terms of unlocking phones, unlocking cars with phones. So the BYD challenge is in the market today, and that's moving some of those pieces for the Hong Kong and Shanghai market. Both are tracking a little bit weaker at this hour. You've got the Australian market flat and the Kospi up 0.7%. The opening calls. Let's get up to speed with those European markets before the start. Fourth positive session in 5 yesterday, and fairly decent bounce on the FTSE 100, up 0.75%. This morning we're looking a little bit soggy, except for that Italian market that may be an UniCredit feature as we wait for market reaction to the bank, Steve.
Yeah, just a quick look at gold. It is hot at the moment, no doubt about it. Many people are saying it's a matter of time before $3,000 a troy ounce is breached as well. Look, we can go through all the usual reasons. 1, geopolitical turmoil. 2, concern about inflation. 3, obviously Trump policies. 4, great piece that Gillian Tett wrote in the Financial Times just a couple of days ago. And I'll just read one paragraph of this. Is Gillian Tett's copy, not mine as well. But also concerned that actually that the US may well revalue its gold stocks and what that might well mean. Currently, they're valued at $42 a troy ounce in national accounts, but knowledgeable observers reckon that if they were marked at current values, which is $2,800 a troy ounce, it could inject, wait for it, $800 billion into the Treasury General account via repurchase agreement. That might reduce the need to issue quite so many treasuries. So I thought that was absolutely fascinating, and as an angle I hadn't even thought about as well. A lot of speculation. And as far as this story about all this gold crossing the Atlantic is concerned, this was raised at the Bank of England, which holds the gold. I was virtually next to the vault just a couple of days ago. And the Bank of England governor and Dave Ramsden, who's also on the MPC as well, said, look, the amount actually leaving the Bank of England is minuscule compared to the actual reserves as well. And I appreciate the gold comic story and obviously having to be domiciled stateside and the planes going across the Atlantic taking the gold. But actually, they were really downplaying the amount of gold that's actually moving.
Fascinating. I think it's been a market distortion story for those that are trading that. What you've seen from all the traders is that it's having huge impact on the pricing action.
Do you think it's distorted? I would say it's behaving beautifully. I mean, look at the steady incline since way before this comic story arrived. It's just a very steady rise upwards compared to, dare I say it, with Bitcoin.
But that's the point. It keeps on going up. And you've got a stock market that is around all-time highs. In that context, when have the two often been a lockstep? Usually it's a safety trade when there's a little bit more fear factor. So you get a lessening of geopolitics, gold is going up. You get high yield, gold goes up. You get a more optimistic market, gold goes up. So it feels like a feel-good factor for gold, no matter what is happening in the background. When is that a normal market for gold?
I think it is a normal market. I haven't heard any trader I've spoken to
one-way trade is a normal market for gold.
What, as opposed to equities, as opposed to Bitcoin?
Well, Bitcoin hasn't been on a one-way trade this year. You have seen it come off with some risk sentiment, so it is acting like it typically does. My point is that gold has gone one way, which has never been the case.
A multitude. It has provided very steady returns. And that's kind of what the World Gold Council and other owners, including the central banks, want from it.
I think it's been a fairly decent return. It's one of those asset classes you almost hold, not just for store of value now, but for genuine returns. And typically it was seen as a hedge. But the way it's behaved this year, I mean, we're getting close to the 3,000 target.
But again,
a lot of banks saw it as an end-of-year target, and we're only in February. So I think there's been a real pull forward here, and this whole distortion story is a big one driving the market.
I'll park it, but I do not believe there is market distortion in the price of gold.
Well,
I think that
you've
is
got about
that is
100
not
commodity
the case.
traders picking up the phone right now.
Well, it hasn't. There is no distortion in the price of gold. It is trading in very normal fashion.
I have to beg to differ on that one. Let's push on and take a look at what we're seeing elsewhere. Tesla has started production at its new mega factory in Shanghai, marking a significant expansion of the company's operations in China. The factory makes Megapacks, the car maker's energy storage batteries. It is the first of its kind outside the US and Tesla's second plant in Shanghai. This was the story I was talking about earlier for EVs. Big day today. BYD shares briefly touched a record high after the company announced plans to roll out driver assistance technology across its EV models. The Chinese automaker said it will install the software at no extra cost across all cars, including a low-cost vehicle priced below $10,000. So typically, this is very much for the high-end product. Now, at the top end, in the most advanced model of the system, BYD is incorporating technology from DeepSeek AI using a combination of software, AI, and cameras or sensors to control a vehicle, minimizing the need for human intervention. And I think that rollout of DeepSeek, that is very quick. I mean, we were only just sort of weeks out of the news flow, and already we're talking about genuine use case in cars at the high end.
Got to be terrifying for everyone trying to compete with the Chinese at the moment in that sector.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabi Lekumete, weekdays on CNBC.